right. Well, thank you everyone for attending this month's market update webinar for December 2023, the last webinar of this year, and we'll have a big recap webinar for January 2024, talking about the whole year of 2023 and what we can expect moving forward into 2024. So let's start with disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed within the presentation. And of course, past performance is not a guarantee of future results. You can see our website for our additional disclosures, and throughout the webinar, if you have any questions, you can submit them during with a Q&A button. All right, let's hop into it. So a little bit about myself. I'm a certified financial planner, accredited investment fiduciary, accredited portfolio management advisor, and chartered retirement planning counselor. You can learn more about me on my LinkedIn. And Silverstone Financial is a fee-only fiduciary registered investment advisor. We provide wealth management services, including financial planning, investment management, tax filing, estate services, things of those nature. You can learn more about Silverstone Financial on our website. So this is going to be a really interesting month to recap. There were a lot of really impactful, or at least interesting, events that happened. I'll just go top to bottom. The first one, for those of you that are saving in a 401k or an IRA, there are a few changes to the annual limit that you can contribute. So a 401k, their annual limits increased by $500 for 2024 to $23,000 a year, plus a catch-up contribution if you're over the age of 50. And traditional IRAs, Roth IRAs, increased their limits by $500 to $7,000 per year. The income phase-out limits for IRAs and some other IRS-dictated maximums were increased to be in line with inflation, like they do every single year. So make sure if you don't know what you qualify for or how much you're able to save, talk to your financial advisor about increasing your Roth IRA or increasing your 401k. That kind of stuff. Quickly, a discussion about inflation. Inflation was good. Remember, this is like kind of 2 months back. We're talking about October inflation in a November recap during December, but we had a good inflation read. So the October inflation was expected to be 3.3%, and we got an actual 3.2%. And usually I find it a little bit easier to explain the month-over-month data, where we expected 0.1% inflation for that month, but we actually got a flat read of 0%, which is good. It means that we're still tracking in the right direction for inflation, which helps the Federal Reserve in their fight against inflation, and helps have price stability, which helps the markets and helps everyone with their buying power and that kind of stuff. An interesting story that I'm not going to spend a lot of time on, but WeWork officially has declared bankruptcy. They've gone through lots of problems, and they were terribly managed, and they were extremely hyped and over invested in. Like, the prices paid were crazy. It was by SoftBank and some other high influence investors out there, and officially has gone into bankruptcy proceedings. And I'm sure someone will buy their assets out of bankruptcy and make a killing. We shall see. Not that big of a story, but I found it interesting. Something that actually might affect some of those that are listening right now. Disney has officially signed the paperwork that they're going to buy the 1/3 stake of Comcast 1/3 stake of Hulu. So those that don't know, Hulu is jointly owned. It was owned by multiple firms, and then 5 or something years ago, it was reorganized where Disney bought up a lot of the small owners, and they got 2/3 stake, and then Comcast had a remaining 1/3 stake. And how they decided to move forward there was essentially they had what's called a put contract. So Comcast could force a sale of their third to Disney, or Disney could voluntarily buy it. And essentially, Comcast, a lot of the didn't want Hulu. They thought about it. It was a consideration, but a lot of the Hulu um, content is owned by Disney. So there's a potential licensing risk where they buy Hulu, but then like half their catalog goes off the website, and then what's it actually worth? It wasn't worthwhile for Hulu or for Comcast to try to buy 2/3 of Disney. That would have been a little bit expensive for them. So Disney is officially buying it. It'll close in the next year or two, and though they might have some more integrations, we might see Hulu get scrapped and just become like a tab in Disney Plus, or perhaps they'll just continue going with some sort of bundle where they have the Hulu, Disney Plus, ESPN Plus, that kind of stuff. But for corporate news, really big deal to see such a large transaction take place, and shows Disney consolidating a little bit more of their power over the streaming wars. Now it's you got Disney, you got Peacock, which is Comcast's other streaming service. You got Netflix, you have Apple TV Plus, you have Amazon Prime, handful of others, but it's definitely getting there are fewer players, and each of them are raising their prices and cracking down on passwords. So some critics are saying it's kind of turning back into cable, but from a finance perspective, a lot of the reasons why these streaming services were so inexpensive was they were being not necessarily subsidized, but they were underpriced to get market share. Now that they have the market share, expect prices to rise. Also with inflation, all other kind of stuff. But this is kind of an expected transformation when you look at it from a traditional finance perspective in large companies. It's not too surprising. Another quick notable event, this was the beginning of the month of November. President Biden signed the budget bill that delayed the government shutdown into 2024, the one that ended up getting Kevin McCarthy fired, I believe. And it'll be interesting to see how close we get to a government shutdown in 2024. If it'll be, a few hours before like last time, or if it's going to be a little bit smoother and we won't get to that kind of like risk, but unlikely knowing the government. It'll be likely that it'll be right up to the edge, lots of arguing, and we'll see if President Biden is able to push through another budget law alongside his colleagues in the House and the Senate. But we'll see. Another quick one was the Israel-Hamas war is continuing. I don't have too much to say about that from a finance perspective, but the one note that I found interesting was usually when there's conflicts, open fighting on a large scale in the Middle East, oil prices rise. And the past 5 weeks, oil prices have steadily been falling. And there's a lot of reasons that oil markets are massive, and there's a lot of contributing factors. But I just want to point out, which is this is not a normal occurrence for oil prices to fall during conflict. So I don't know how long it'll continue, but interesting to see. And then the last three, I put 3 pictures down at the bottom of the screen here, all very different people, all in very different tracks of life, and I don't want to equate any one to the other. But these 3 people had big happenings in the world of finance this month. So Sam Bankman-Fried, he was the former CEO at FTX, which is a crypto exchange. I'm sure you've heard plenty about him. I've definitely mentioned him before. He was officially found guilty of fraud and will probably be facing many, many years in prison. His sentencing hasn't happened yet, but it is significant. And it's a good reminder to be wary of scams and frauds. And not all crypto is necessarily bad. It's not inherently bad, but it is less regulated. And you get a lot of protections when you work with regulated companies. We are a regulated company. A lot of broker-dealers all broker-dealers in the US are highly regulated. The banks are highly regulated, which is a lot of the reason why they're safe in comparison to what was happening in the Caymans with a hedge fund and crypto exchanges without regulation. Fraud can happen. Another Sam, but a very different Sam, Sam Altman. I'm not going to go too deep into what happened with him because it was crazy to see. A lot of things were happening, and there are better coverages of what happened by CNBC, and lots of YouTube channels have covered it, so you can go look it up. But Sam Altman, he was the CEO of OpenAI. It's the company that does ChatGPT, the AI, large AI company. They have a board of 4 people that have a lot of power. And what happened, and it came as a shock to everyone, they fired Sam Altman without any warning. Now, it's important to note that Microsoft owns 49% of OpenAI. It's billions and billions of dollars that they invested in the company. And they were blindsided by the firing of their CEO. And again, so there are other places that will cover it more in depthly than I will, but quick recap, like he wants to go fast with the AI, he wants to develop, and he has more optimism than some of the board members. They were afraid that they're going too fast with AI. The AI could break things in the world and cause mayhem and chaos and stuff like that. So they wanted to, they kind of like orchestrated a coup, a silent coup, to replace him with someone that was a little bit slower in the development. But what happened is, Sam Altman is a beloved character in these spaces, and I don't know very much about him, but apparently his employees really, really like him because they signed an open letter. There's hundreds of them, and it was the majority of the workforce, I don't know, like 60 or 70, maybe more percent of the workforce that threatened to quit if he wasn't reinstated, and that the board would resign themselves, which is kind of crazy to think about. And after a fight over a weekend, it was like 4 days, 3 days, something like that. Sam Altman was officially brought back as CEO. I think a couple of the board seats might have resigned. I'm not sure what happened to the different board members, but a lot of the stakeholders, specifically Microsoft, came out and said, we want way more regulation, and we want not necessarily regulation, but like compliance, and they want their own board seat because they own 49% of it, but they didn't have a board seat. What gets even more complicated is the board is for like a nonprofit that owns OpenAI, which is a for-profit company. So 2 different organizational structures, which isn't necessarily supposed to happen, but it was structured in a strange way because AI is dangerous, but then people also want to make money off of it. So there's probably going to be a lot of changes with the ChatGPT OpenAI company, but for the actual service, for those of you that use it, that want to talk to an AI and help create art or writing or whatever, you probably won't see very much of a change, from a consumer side. But from a finance side, it was very interesting. And the last person I wanted to mention was Berkshire Hathaway's Charlie Munger. He was Warren Buffett's number 2 for decades, and helped bring Berkshire Hathaway into like the investing giant that it is today. He passed away at the age of 99 this past month. He was, I believe, 5 weeks. He was born sometime in January to being 100. So he's 5 weeks off turning 100, which is sad. But, he had a lot of impact and, inspired lots of people. I don't have strong opinions about him. I know so he ruffled some feathers because he was an opinionated person, but he definitely was a successful investor. So I just wanted to bring it up since it was definitely very large finance news for those that, live in our circles or my circles, looking at the markets each day and following that kind of coverage. All right, let's hop into Fed expectations. There was no impactful meeting this month. We had it early November, and we'll have another one soon in December for the Federal Reserve deciding on whether or not to raise interest rates, cut interest rates, keep them the same. But there's kind of consensus and expectation that they're going to hold it at current rates, no changes for at least a few months. And then you start getting just speculation. Some analysts believe that they're going to cut rates in early 2024. Others are going to believe they're going to cut rates in mid 2024. The Federal Reserve is claiming that they're not even thinking about cutting rates yet. But they kind of have to say that simply because if they signal that they're going to cut rates, all these markets are forward-looking, so there's expectations involved. So they don't want to kind of lift their foot off of the brake pedal yet, which is what the raising the rates does to slow down the economy. And if they say, well, we're going to raise our foot off the pedal, it effectively does raise it off the pedal. So there's likely not going to be much for me to say for at least the next few meetings where they're going to say, we're not even thinking about cutting, but they are thinking about cutting. They can't say that. And then the analysts are going to be trying to determine when are they actually going to cut rates, which will stimulate the economy. But right now we've had good economic performance. We're not in a recession. We're not having everything blow up. We'll have to see if that continues. And essentially, if they cut rates, that means the economy will go faster and the market will do better. But they would only be cutting rates if there's something that is broken or expected to be broken, which is a bad thing. So we're kind of in a Goldilocks spot right now where everything's going smoothly, and that's why they're keeping it flat. And I'll keep you guys updated as I get updates and I listen to what Jerome Powell, the chairman, has to say in the coming months. All right, well, November performance. What a month. I have to say it was really impressive. It was the best month since July 2022, I believe. The S&P 500 up almost 9% in a month, which for those of you that know historical averages, a lot of the times the S&P is quoted as on average returning 8 to 10% per year over the long term. Well, we just had a 9% return in 1 month. Of course, that is coming on the heels of 3 months down. And this is a little bit of a rebound that was expected and good to see and kind of needed simply because you can only sell so much before things get undervalued and people want to buy. So quick running down here. So Dow Jones performing the worst out of the three large U.S. stock indices. Usually the Dow Jones is more value oriented, so performing slightly worse. S&P 500 is in the middle. The mega caps are made up of the Magnificent Seven. Google, Meta, Amazon, Apple, Nvidia, Tesla. I might be missing one. Apple, if I didn't say that. And so outperform slightly as they have throughout the year. And it'll be interesting to see what the Magnificent Seven, so the largest 7 stocks, these 1, 2, 3, 4, 5, 6, 7 largest stocks do in 2024, simply because they've been bid up so much this year that they have relative safety because people like them and people keep putting money into them. But there's also like the valuation side of it. Have they grown so much to justify that increase in price? Or is there going to be a pullback when the broader market is safe and they're going to sell these large cap names, the mega cap names, for some of the mid caps and the small caps, that kind of stuff? We'll have to see. Talking about small caps, they performed worse than the others, the larger caps, but not by much, still up 8%. The ex-US economy, so internationals, performed in line with the S&P 500, which is usually it underperforms the S&P 500, so abnormal, but still not crazy shocking. Aggregate bonds, total return of 4% for the month, quite good. In the past 12 months, haven't been performing particularly well, just kind of flat, not doing much. Gold being up 3%, nothing that important there. Crude oil down 6%, the only red on this chart. You also see energy on this heat map over here, that being down slightly in line with crude oil. Oil being down more than the energy stocks. But I had mentioned before, conflicts in the Middle East, but oil not rising is strange. So I don't know how long it'll last, but yeah, I don't have much to say about it. Just an interesting thing that I noticed. And Bitcoin up another 9% for the month, in line with actually slightly above the mega caps. Again, still the hype and the excitement over a spot Bitcoin ETF. We'll have to see if that continues. Quickly, year-to-date performance. Dow Jones basically was flat last month, and now it's up basically what it made this month. The S&P 500 up 19%. Again, last month it was up like 8 or 9%. So almost all the returns, if you missed out this month, you're sitting on the sidelines. You missed out on a ton of returns, which is why usually the recommendation is stay in the market. Don't try to time the market. Dollar cost average. They're boring investment advice. But it's important. Small caps flat at 1% for the year, being hurt by some of the banks, especially, but also real estate, utilities. There's some red on the chart. Mega caps, as I mentioned, up 32%. So that's the top 50 largest companies in the S&P 500 is what this index shows. And most of that's being driven by the Magnificent Seven. Nvidia up 220% for the year, which to me is ridiculous. It's a good company, but Taiwan is a risk, and it scares me as an advisor. Microsoft, Apple, around 50%, Google around 50%, Amazon around 75%, Tesla almost 100%. The other big one other than Nvidia was Meta, up 170%. But that's a little bit more justified because there was a sell-off specifically on Meta previously, and this is a rebound back to kind of where it was. Versus Nvidia, it was high and it went significantly higher. Just slightly different scenarios for each of them. Global X US in slightly worse than the Dow Jones, underperforming the US significantly, as I expected for 2023, as I expected the year before, as I expected the next year. Usually, at least historically, international stocks perform worse than the US. The US has been really performing well on the world stage from a finance perspective and an economy perspective. And so I expect it to continue to, I have client assets underweight international across the board by about half of what's traditionally just equal weight. So I'm not a huge fan of international stocks beyond some really well-performing niche companies, and India as an economy is quite attractive, but a lot of the rest, India, Brazil also slightly attractive, Mexico slightly attractive, but a lot of the rest not particularly attractive. U.S. bond returned on average, aggregate bonds, so all the bonds in the U.S., 2.2% for the year. So that's total return. It's not significant like returns, but at least you didn't lose any money like we had last year, where you had rising rates, so bonds were not safe. It was not protection from, usually it's protection from stocks. Both stocks and bonds went down last year. This year, stocks went up, bonds stayed pretty flat. Interesting to see. Gold up about 12%. Last year, it was down, which was strange because of inflation, and gold is catching up slightly, so it outperformed the Dow Jones, but underperformed the S&P 500. Crude percent just because of the losses this month. Nothing to write home about. And of course, the biggest number here was the Bitcoin. If you bought it January of this year, you'd be up 130% for the year. Again, I gotta warn not to get overly invested in cryptocurrency. I, as an advisor, am perfectly fine recommending it as a small portion of a portfolio. Small portion being like less than 5%, usually closer to 1 or 2% for me. But it's definitely performing well this year. So for those of you that are interested, invest responsibly, I suppose. All right, quick explanation about historical returns. I show this each month. For those of you that don't understand how to read it, The outside shows the average historical return for the month, and it helps show the cyclicality or the seasonality of the markets. There are some inherently good months traditionally and some bad months, usually September being the worst month, and then November, December being the best months. Also, I'm sure you've heard of the Santa Claus rally in December. These are usually performing well. What we had for the year, it kind of stayed in line where we had up, up. This is usually a coin flip. We were down, and then up, up. This is a coin flip. We stayed flat in line. June was the one big upset where we had a really good June, whereas historically a coin flip. July, in line with kind of what you'd expect. August, in line with what you'd expect. September, quite a bad September, but in line with what you would expect. Then October extended the weakness in September. A lot of that had to do with some of the Federal Reserve speak and how they were projecting things forward. But because of this, being an upset, performing worse than historically, I was saying we're due for a good November. We had an incredibly good November. So the best performing month this year, one of the best performing months of this year and last year. For year to date, we're at 19%. Again, last month, if this number said 9.2%, so almost 10%, about 9% of those returns for year to date all happened this month. It's kind of crazy. And then next month, of course, I can't predict the future, but we'll see. And I'll talk a little bit more about it next slide. But historically speaking, December is performing well, January is performing well. So we'll likely see some positive returns. Of course, not guaranteed, but some positive returns December, January. And then we'll see the rest of the year how that performs. Maybe we'll have stumbles in February. We'll see. All right, this is the last main slide. This is the charting slide. So this is the S&P 500. I'm not a technical analysis expert, but usually I try to just show some basic investment technical lines and charts to help some of the viewers understand what a professional would look like. So this is what's called a candle chart. This yellow range right here is a range that it was trading in. The S&P 500 was trading in regularly up and down within the range for a lot of 2022. And in May, June, I've been saying it will likely stay in this range, and I had predicted that it would come back down. I was wrong, which is a good thing. This is that June upset that I had mentioned, and it broke out of the range. It broke through the ceiling. This is called a floor, and this would be called a ceiling. And it broke through that, and it had a really good June, really good July. I predicted a continuing good July after we broke out. Then it peaked in August. I had predicted that August would be bad, and I was correct. In September, I expected that we would continue to fall and get closer back down to the range. I was correct. October, I was incorrect, where I was saying likely it will, the markets will recover from here since we had 2 months down. And also, looking at historical patterns, that October performs well. Now, that was an upset where we fell in October for the reasons I had mentioned before, Federal Reserve and some different economic news that came out. November, I had a pretty strong call. It was like, I feel like since we touched back the ceiling, in a lot of ways, it had kind of become a floor again. And I expected we had oversold and we were going to have a good November. I had also said that by the end of the year, I was hoping for 45 or expecting 45, ending at 45, and hoping for 4,600 on the S&P 500. Now, this was a great month, and it surpassed what I was expecting and hoping because for the next 2 months. So we're at this interesting peak, matching where we were peaking in August. So this could be considered a ceiling. But personally, I'm optimistic, and I think that we might trade flat. We might give up a few gains in the first half of the month, but I wouldn't be surprised if we had a slight Santa Claus rally happening. So kind of what you see here, if you look at March, and this isn't exact, but March, it came at the bottom, and then you had a run up and then you traded flat for 2 months, flat slightly up. So I kind of would expect that trading flat and then maybe a Santa Claus rally right after Christmas before New Year's, up a little bit. Of course, not guaranteed. There's just some thoughts. I try to, have a prediction each month to see how I'm performing long term. Right now, 4 out of 6 since I've been keeping track of, the yellows were wrong and the greens and reds were the right call. But yeah, we'll see how the markets perform. Last month I said, hopefully I'll have good news for you next month, and I have great news for you, which is wonderful. Again, I'll say the same thing. I hope I have good news when I do the January monthly market update webinar discussing what happened and what we can hope to see. Hopefully December will be good and we'll have that rally and we'll perform as, the cyclical historical returns show. But if not, know that, we had a solid run up until the end of the year, and we're in a pretty solid space. I'm pretty happy with where the economy is, where the stock market is. All of my clients are, not all, but like the clients that is appropriate for, that are saving regularly, dollar cost averaging, they're performing well, they're happy. So as long as you use prudent investing techniques and trying to time the market or invest riskily or anything like that, you should perform well. So I'll end it here. I've been watching. I hadn't seen any Q&As come in, which is hopefully a good thing. It's hopefully that I addressed the questions before they had to be asked. But if anyone has a question, I'll sit around for a couple minutes. Otherwise, you can always email me, especially if you have a personal question that isn't appropriate for every person here to hear the details of. You can email me at jeremy@silverstone.financial. It's my email. And I'm happy to help you out there. If you're already a client, we'll figure out how to move forward there. And if you're a prospective client, I'm happy to give you a free consultation. Kind of stuff. So I hope everyone has a great holiday season. For those of you that celebrate Christmas, Merry Christmas, Happy New Year, and I'll see you all in 2024. We'll have that big recap webinar that I do each year, and hopefully it'll predict a good 2024, and hopefully we will have a good 2024 for all of us. All right, well, have a great holiday with everyone, and see you next year.